One of the things I've actually struggled with the most in my trading journey has been marking out the charts, anticipating for price to come to a key level, and then waiting all week for price not to mitigate that position. And in this video today, I'm going to share with you an example of that with reference to Euro US dollar, a trade idea that I analyzed, and I'll share that as well with everyone who has been watching all of our contents. You can see this was pretty much the last video that I made, and I was talking about Euro US dollar, and in that video I talked about my key level where I'm anticipating to buy, because I said I'm bullish. I've always stated my bullishness on euro, how I want to see euro continue higher, and this key level was the key level I was watching for price to come down into. And this week, we started this week on Monday. Right here, price was around here on Monday, came down, and then, so this was last week's price action. We came back down here on Thursday, and on Monday, right here, price came down here on Monday, and then it literally just took this low, and that was sufficient for this expansion into the upside. And now we've left this low resistance liquidity right here. So personally, I'm not gonna jump in. And this is a question most traders ask themselves, and I used to battle with this, which is the point of this video. What do I do when price does not come to my key level? Do I FOMO in? Do I jump in? Do I start looking for entries? Do I see this as a break of structure and start looking for retests? The answer is I do nothing. That is the absolute answer. Not taking a trade sometimes is way better than taking the bad trades. And trying to jump into any random trade right here after this expansion is just me calling for the market to run my stop loss. Because for me to engage in this trade, I need to engage when price comes into a discount zone. And where is the discount zone? Right here is equilibrium. Anything below it is discount. So if I wanted to buy, I want to buy at discount. And right now, price is actually at a premium zone. So let me pull out another chart that I use for my analysis. So right here, currently, if we use the Fibonacci from the high to this low, so we're working with the range high, range low. Let me pull this out so you can see. So right here, if we go to the weekly time frame, let me remove this and put it back. So right here, this is our range high, this is our range low. We'll go to the daily time frame. You can see very clearly low, high. This is our extreme premium zone. Right here, you can see that price has actually mitigated that extreme premium zone. So this is not in any way a key level that I want to be looking for a buy. And also, I'm not going to be selling it. Why? Because the overall trend is bullish. The overall trend is bullish. So all my analysis is for anticipation for price to continue to the upside. And look what price came up to do here. Remember this key level right here. This is our swing high. This is our swing low. And right here, this swing high, look right here. Look what price did. Came up here, wicked the highs, dropped to the downside, came back up, and look what happened. Look what happened right here. We came up to break above this high. So let's look at this on the line chart, because I know sometimes using the bar chart can be a bit confusing. But if we're looking at this, this is our swing high, this is our swing low, and this right here was a break of structure, a significant break of structure right there. And this right here is liquidity. This was the last down close candle before breaking that structure. So I'm anticipating for a potential retest for a run on sell side liquidity before a continuation to now run this overall buy side liquidity. Now, price can still decide to continue higher and not give us that opportunity for a downside move, for a retracement, and that's okay. But if we do see price come down here, we've mitigated an extreme premium. I'm expecting at least a discount before a continuation to run these overall buy side liquidities. So that is what I'm watching. And to answer the question once again, what do I do if price does not come into my point of interest to mitigate and then continue higher towards my overall direction? What do? I stay on the sidelines. That is what I do. No trade is better than bad trade.